historical step towards market liberalisation. From Monday, foreign fund houses will be able to apply to buy shares in the $500 billion A-share market. But the long-awaited opening of the markets was greeted today with a sell-off. The local currency-denominated markets in Shanghai and Shenzhen both slipping more than 2.5%. Investors are cashing in on gains made after regulators announced the decision to open the domestic markets last week. Lisa Barron has the story.
Once the forbidden fruit for outside investors, China's domestic share markets are now open to overseas funds, allowing foreign fund managers the chance to tap into the mainland's rampant growth.
Foreign investors have eye on the market potential, an investment opportunity in the domestic equities market in mainland China. There is a regulated avenue for them to get into the market. It's the first step by the Chinese government to open up its capital markets following the accession of China into the WTO.
The yuan-denominated A-share market, capitalized at about $500 billion is Asia's second-largest stock market after Japan's. Beijing has slapped a number of restrictions on foreigners wanting to cash in. Under the Qualified Foreign Institutional Investor Program, known as QFII, foreigners must invest $50 million to $800 million each, provide financial statements from the past 3 years, and promise to keep the funds in China for at least 1 year. Closed-end funds have to keep their money in China for 3 years.
I think China is adopting a very cautious stance amid opening up its equities market, and it wants to encourage mid to long-term investment fund flows into China, and would like to fend off short-term hot money flowing into China for short-term speculation.
But many analysts say foreign investors aren't likely to sink large amounts of money into China at the moment.
There are lots of problems investing in the Chinese companies, which are all quite well known. You know, valuations are high, liquidity is quite low or restricted, and also the corporate governance is it's improving, but it still has a lot to be desired.
Over the weekend, China issued new rules tightening information disclosure for its 1,200 listed companies. But the QFII scheme still isn't likely to have a major impact in the near term. Foreign funds can't enter the domestic market until applications are approved sometime next year. Lisa Barron, CNN, Hong Kong.
Well, turning to the other markets in the region now, and a lukewarm response.
This is perhaps the most advanced